Hi, my name is Jim Ketting. I'm the founder and CEO of PFitter, and what we do is we're kind of the Kelley Blue Book of fixed income securities. So we help people make better investment decisions or more informed decisions. I was asked about what's happening after the election. A lot of entities that we're working with, banks and credit unions and municipalities, have found that their portfolios have dropped drastically. And a lot of times they're under pressure from their board or advisors saying, wait a minute, we're supposed to be safe, and these investments have dropped 5% in just a few days. How come this has happened? Well, if we take a look at how people do things, they're creatures of habit, and they tend to do things the way they've always done things. Now, a challenge is that somebody who invests the money is always trying to get a better return on the money. And if we look at the yield curve, the longer term we go out, the more rate of return we get. We also take on more interest rate risk. And what interest rate risk is if you look at the inverse relationship between a bond price and the interest rates, if market interest rates go up, the price of the bond goes down. If market interest rates go down, the price of the bond goes up. Now, what's happened is many people have gone longer and longer on the yield curve, so little tiny moves in the interest have big fluctuations in the price of their portfolio. So we talked to one customer who was looking to buy an agency, a federal farm credit, right before the election. They went to our software and they found that that was at a price of $99. Only 2 weeks after the election, that price of that investment had dropped to $95.5, which means that $5 million purchase that they made had lost almost $175,000 in just a couple weeks. And that's too volatile for most of these fixed income portfolios. To put that in perspective, it would take them 2 years to get back to break even. So if they would have put the money under the mattress, they would have lost nothing. Instead, they went after a higher yield and they dropped in value by $175,000. What we're trying to do is help somebody get this information so they can make a better informed decision when it comes to interest rate risk. It's a big deal right now. And a lot of administrators are coming to us saying, how can we provide better internal controls so that they have better oversight, so that the people making the investments are disciplined in how they make those investments?